Starting a business can be an exciting journey, but one of the biggest challenges many entrepreneurs face is securing the necessary funds. Without sufficient capital, it can be difficult to get your business off the ground or to scale it off to the next level. One effective way to overcome this hurdle is by obtaining business credit. Business credit can provide the financial resources you need to invest in equipment, hire employees, and expand your operations. However, getting approved for business credit isn't always easy, and it can be frustrating when you face rejection. In this video, you will learn how to get approved for business credit. First, let's talk about the importance of building a strong business credit profile. Just like personal credit, your business credit score is a reflection of your company's creditworthiness. Lenders and creditors use this score to determine the risk of lending to you. To build a strong business credit profile, start by establishing your business as a separate legal entity. This means registering your business with the state, obtaining an employee identification number, EIN, and setting up a business bank account. These steps separate your personal and business finances, which is crucial for building business credit. Next, it's essential to maintain a good payment history. Pay your bills on time, every time. This includes paying your vendors, suppliers, and any existing business credit lines that you have. Consistent on-time payments show lenders that you are reliable and can manage your debts responsibly. If you have any outstanding debts, work on paying them down as much as possible. High levels of debt can negatively impact your business credit score and make it harder to get approved for new credit. Another important factor is to keep your credit utilization low. Credit utilization is the ratio of your credit card balances to your credit limits. Ideally, you want to keep this ratio below 30%. High credit utilization can signal to lenders that you're overextended and may struggle to repay additional debt. If possible, try to pay off your balances in full each month. If that's not feasible, aim to pay down as much as you can to keep your utilization rate low. One often overlooked step is to regularly check your business credit reports. Mistakes can happen, and errors on your credit report can hurt your credit score. By reviewing your credit reports from major business credit bureaus like Dun & Bradstreet, Experian, and Equifax, you can identify and dispute any inaccuracies. This proactive approach ensures your credit profile accurately reflects your business's financial health. It's also important to establish relationships with vendors and suppliers who report to business credit bureaus. Not all vendors do this, so it's worth seeking out those who will help you build your credit history. Ask your current vendors if they report to credit bureaus, and if not, consider finding ones who do. Positive payment experiences reported to the credit bureaus will boost your business credit score over time. Additionally, applying for a business credit card can be a great way to build credit. Many banks offer credit cards specifically designed for businesses. These cards not only help separate your businesses and your personal expenses, but also provide an opportunity to establish a positive credit history. When choosing a business credit card, look for one with favorable terms, such as low interest rates and beneficial rewards programs. Finally, consider applying for small business loans or lines of credit through reputable lenders. When you do, be prepared to provide detailed information about your business, including financial statements, business plans, and tax returns. Showing that you have a well-thought-out plan and a solid financial footing can increase your chances of getting approved. Many lenders, especially when you're just starting out, will look at your personal credit score to assess your creditworthiness. This is because in the early stages, your business might not have an extensive credit history. A strong personal credit score indicates that you have a history of managing credit responsibly, which gives lenders confidence that you can handle business credit similarly. If your personal credit score is low, it may limit your options or result in higher interest rates and less favorable terms. Once your business is established, your business credit score becomes more important. This score is a measure of your business's ability to repay its debts, and it's based on factors such as payment history, credit utilization, length of credit history, and public records like bankruptcies or liens. A high business credit score shows lenders that your business is financially stable and reliable. This can lead to better credit terms, higher credit limits, and lower interest rates. To improve your chances of getting approved for business credit, work on boosting both your personal and business credit scores. For personal credit, pay bills on time, reduce debt, and avoid applying for too much new credit at once. For business credit, ensure you pay vendors and creditors promptly. Keep your credit utilization low and regularly check your credit reports for errors. Building strong credit habits over time will enhance your credit scores and improve your ability to score business credit. In summary, getting approved for business credit involves building a strong business credit profile, maintaining a good payment history, and keeping credit utilization low, regularly checking your credit reports, establishing relationships with reporting vendors, using business credit cards, and being prepared when applying for loans.